Hey there, good afternoon. December 17th, 2020. Why am I sharing this book with you? Well, back in 1993, I began my investment career managing money for Monroe Trout. I actually spent the first 6 years of my career managing money for Monroe. This book was published in 1992. Monroe Trout was featured in this book. It's on page 149, and it's titled The Best Return That Low Risk Can Buy. Now, what a better day to talk about managing risk than with the S&P closing at its all-time high, highest close in the history of the stock market. It's a perfect opportunity for you to ask yourself what's in your portfolio that can help you profit from stock market declines. Or reframe it another way, what's in your portfolio that can help you preserve and protect these historic stock market gains. So let's talk about managing risk and look at some charts. And as a reminder, you will often hear me say this, and I'll say it again. The best way to protect and preserve your historic stock market gains or profit from stock market declines is shorting the market when you need protection and stepping aside when you don't. That is our expertise here at 3D Capital. All right, let's go talk charts and talk about managing risk. This is an S&P 500 chart dating back to 1993 when I began my investment career. And as a reminder, my entire career has been spent managing risk one day at a time. Also important to remind you, we're not doom and gloom here at 3D Capital. We exist to make the buy and hold stock market investment a better investment. So we've got over 100 years worth of experience managing, researching, developing, and investing in equity risk mitigating strategies. We exist for one reason, and that's to make the stock market a better investment. All right, so let's go back to the chart and talk risk. Here you can see a 51% decline. This is 3 consecutive down years, by the way, 2000, 2001, and 2002. A 51% decline. Fast forward to 2008, a 58% decline. And then from the March 09 low to January 2018, it appears to be a straight line, but again, there are opportunities to profit. Red bars represent a risk and an opportunity to profit. You can see we entered a new volatility regime here in 2018. Clearly a 12% decline, a 20% decline, and a 36% decline. And let's just think about that. You know, a lot of people think shorting the market is a risky proposition. And if you know what you're doing, if you're an expert, and again, all we do is care about helping investors profit from stock market declines, and the way you do that is shorting the market. Now, if you're buying the market, that also looks like a risky proposition. Let's go back to the chart. I mean, you've had to endure a 51% decline, a 58% decline, and again, a 12, a 20, and a 36% decline. That seems risky as well. So how do you take advantage of this? Well, we started here with a monthly chart. This is a 50,000 foot view. Let's take a look and drill down and look at a weekly chart. Here's a weekly chart since we entered the new volatility regime. And you know, I've been on Bloomberg, and we just did an interview. It was published in Seeking Alpha. You will often hear me say, managing equity market risk every day matters, right? Risk happens fast. Escalator up, elevator down, grind higher, sell off sharply. The next few charts are going to make it very clear that this is the case. Again, risk happens fast. The market waits for no one. All right, let's take a look at some charts. Here you can see the market makes a new all-time high in January of 18, drops 12% in a matter of days. Takes a couple months, rallies back 12%, and then drops 20% in the last quarter of 2018. Takes over a year to rallies back 45% to a new all-time high in 2020, and then we all remember what happened this year. We had a historic descent, 36%, of which most was overnight, by the way, not the norm, and then we've rallied 70% to new highs here in early December. This is through November, but within the first 2 weeks of December, we've continued higher. Again, red bars and arrows represent a risk and an opportunity to profit. Let's drill down even more. So we saw a monthly chart, a weekly chart. Let's look at a daily chart. This is a daily chart of the S&P 500 since the new volatility regime began in January of 18. Again, the market doesn't move in a straight line, right? S&P is up about 36% in the last 3 years. How did it get there? We all remember what happened in 2018. We obviously know what happened here in 2020. So clearly the market moves in two directions. If you're looking to profit from stock market declines, you have to be able to short the market. That's our expertise. How does it, or when do those opportunities present themselves? Well, every day. Every day. So let's take a look at a daily chart going back 3 years and take a look at all of the opportunities to profit. Here we can see many red arrows, definitely a risk that needs to be managed and also an opportunity to profit. There have been 11 drawdowns averaging about minus 11%. So the black line, the dashed line, market clearly has moved higher, but look at all of the opportunities to profit. That's how you make the stock market a better investment. You're guaranteed that black arrow, right? You're guaranteed gains when the market goes up. If you can profit from the downside, you will be better off in the long run. All right, so that's a daily chart. Now, you will hear me say, and I've said it many times already in this video, the best way to profit and protect yourself from a falling stock market is to short the market. The other side of that equation is you have to be able to identify strength, right? You cannot profit from weakness if you can't identify strength. And when you manage equity market risk every day, let me back it up. You can profit from stock market weakness if you manage the risk one day at a time. Right? Market goes up more often than it goes down. So holding a short position is likely why a lot of people think you can't be successful shorting the market, because historically the market goes up. So logically, you don't need to have a short position all the time. If you do it strategically, which is what our 3D Defender program does, then you can have success. So let's take a look at this week. Right? We've seen an opportunity this week, historic week, with the market settling at an all-time high today, December 17th, 2020. But how did the week start? Let's take a look. Here are the first 4 days of this week. As a reminder, the 3Ds, daily dynamic defense, right? That's our expertise. I will continue to say this. You are guaranteed gains when the market goes up. That's not a problem. The problem is guaranteed losses. If you can turn those losses into gains and or outperform the market when the market's going down and then step aside when the market's going up, you're going to be better off over time, right? Lose less, make more, compounding, eighth wonder of the world. It makes sense. All right, let's go back and take a look at what happened this week. So 4 days into the week started with a down day. That's an opportunity to profit. Market's down about 0.5% on Monday, and then it's clearly straight up from there. So if you can profit on Monday and then step aside Tuesday, Wednesday, and Thursday as the market is rallying and making new all-time highs, you're better off. Bottom line, best way to protect yourself from a falling stock market is to short it when you need protection and step aside when you don't. That is our expertise here at 3D Capital. If you have any questions about managing risk or helping you profit from downside moves in the stock market, reach out and give us a call. It is our expertise, and we are here to help you.